Welcome to the Pirls Stock Market Commentary for market week ending Friday, March 14th, 2014. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell from 2.21 to 1.66, still in bullish territory. The total count of securities in bullish or bearish patterns fell 3%, to 2,145. The count of bearish stocks increased 17%, while the count of stocks in bullish patterns increased 12%. The Santu Pearls PNF Market Breadth Summary Chart shows us a market now 5 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a member by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 87 points for the 16th decline in 31 weeks. At a positive 379.79 points, it has fallen back below the September 2012 high, the October 2013 high, and the January 2014 high. It continues below 7 of the 8 tops above plus 100 and above all 6 bottoms below minus 100 in the last 35 months. Market gauge volume analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 3 accumulation days and 6 distribution days. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 also ended in distribution mode. Momentum. At minus 95.36, the CCI 20 daily now has 2 days below zero and is outside the plus or minus 50 range for a zero line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 56 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 weekly continued above plus 100, although downward from last week. We will continue to follow this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, banks continues in the top 5. Oil services has entered the bottom 5. Bearish, disk drives continues in the bottom 5. Networkers has entered the bottom 5. Gold and silver has left the bottom 5 and now leads the top 5. Brokers and S&P retail have left the top 5. Focus this week. B of A warns VIX spells trouble from Zero Hedge. And there's a chart that is rather interesting. The VIX broke sharply higher on Friday, completing a month-long base double bottom. This formation targets the 20 area and says that investor anxiety will persist in the week ahead. More troubling is that this base developed from above the 14M range lows at 12.13. It warns that sentiment is undergoing a regime shift to higher levels of uncertainty and that the range highs at 21-22 are vulnerable. Zero Hedge suggests that you beware. Thank you for viewing this week's Santu Pirls Stock Market Commentary. Hoping that you are having a pleasant weekend, that you have a great week coming up, and wishing you true success.